Hi traders, in this video we're going to be taking a look at Euro Aussie, and you shouldn't trade it until you see this information I'm going to divulge within this video. Now before we get into the analysis and the data behind that statement, I want you to answer this question for me in the comments section. I want to get you thinking, and one question I want to talk about today is your profit target, and I'm really interested to see if any of you stop trading once your weekly or daily profit target is achieved. I think there is a psychology around trading where we can continue to trade despite hitting those targets. And sometimes it can be a negative, sometimes it can be a positive. So I want to get your feelings and thoughts towards that. So drop that in the comment section down below. Let's talk some data anyway. Let's get into the good stuff. And what we've seen recently, or what we saw sort of yesterday, was the fact that the Australian dollar CPI month on month came in a little bit hotter, came in hotter than expected, rose back up to 4%. And the reason why I'm bringing this up is because the Australian economy is very unique at the moment. The fact that inflation is holding a little bit higher than other countries at the moment, which is giving a difference between the two central bank speeches, which I'll come on to in a second. And what I've also put up is the unemployment rate. Now, one mandate that the central bank will try and follow is full employment, and they are technically doing that right now because the unemployment rate is fairly low. Considering if we look at pre-2020 levels, it was around about 5%. So they were obviously fairly happy with it in and around those levels. 2020 came along. Obviously, we had the shock of COVID. And since then, the unemployment rate has been in the decline. Now, looking at the average, it is starting to climb, essentially. But it's not at levels where a central bank would be looking to cut interest rates, essentially. So higher CPI, low unemployment rate, economy technically, from that standpoint, good. Depending on what your term of good is for a good economy. And the interest rate at the moment around that 4.35% level. And I've just pulled out a headline here: Australia alert to upside risks to inflation, says RBA's Kent. So RBA members talking about them potentially needing to do something about the upside risk. One of the tools that they can do is hike interest rates. So let's look at the sort of strength and weakness behind the Australian dollar at the moment. So the Aussie is the grey line, and you can see that it was in a weak position about 3 weeks ago, and that has since changed. The market has started to see that the Australian dollar technically, because remember the currency strength meter is built from a technical indicator, technical analysis, well, it's showing us that the Australian dollar from a technical perspective is on par with the US dollar, which is the red line at the moment. Both similar in terms of their movements right now, which is quite interesting to see. This chart here then, so this is quite an interesting chart as well, because what I wanted to try and highlight with this was the performance against the US dollar, okay? And this is what I talk about when we come to trade cross pairs. So for Euro Oz, for instance, we trade in the Euro US dollar price versus the Australian versus the US dollar price, right? So essentially what we've got here is, or what I have done is put on a few different currencies, showing us what the Australian dollar is doing against the US dollar. So what can we see? Well, the white line here is the Aussie US dollar price, and it is holding its own against the US dollar compared to pound and Kiwi, which are seeing some downside, and compared to Euro US dollar, which is seeing significant downside as well. Now the break at that point came around about the start of June, where we were looking for that potential difference between the Australian dollar and the Euro US dollar. Now, if I go on to Euro Oz and we kind of take a look at June, that would be this kind of swing high in here. And the market is technically moving to the downside now. We've got these kind of lower highs and lower low patterns forming within the market. And recently, we've just broken into some fresh lows as price approaches this 1.6 level. Now, this is a weekly time frame. So what I'm essentially looking for is the longer term play here for Euro Aussie. Now, as traders, you can try and trade both. Obviously, overnight swaps might be a little bit difficult, but selling the underlying currency of Euro and buying the higher interest rate of the Australian dollar, we will get some positive swap charges on this as well. And again, I like to look for those type of things if I'm thinking about long-term opportunities. Now you can see I've got an alert set 1.62 because that is the sort of an area where the market could come into. So we've had a move down, consolidation, move down. I like to target these areas as potential opportunities for continuation. So in theory, what I'm thinking right now is we might see some continuation to the downside, perhaps into this key swing low where we saw lots of buying, and then wait for that pullback condition. Now obviously as traders, you can try and still trade the intraday downward trend here that's forming, but I'm just giving you the bigger picture at the moment, because what I feel with the difference between central banks as well, we've got the ECB looking to cut rates, we've got the European politics that are coming into play, potential downside risk from that. I like the idea of 156, okay, because we've got this big move to the upside, big volumes being traded around that area. So I'm looking to target 156 Euro Oz overall over the next year, okay, as long as that fundamental picture remains the same. So let me know in the comments down below, and I will like the video, and I'll catch you in another video. Cheers.